What's going on, guys? Welcome back to another video. Today we're going to be taking a look at the gold market. For a couple weeks and even a couple years, I've really been emphasizing the importance on watching the gold market, and recently it's been moving very bullishly. So what we're going to do is we're going to take a look at a few charts and give you guys a couple examples to look at and a short breakdown and analysis of the gold market and the way that we're probably going to go about either playing it and or watching the gold market. All right, guys, here we are. This is a chart of the gold futures. Now, what we're going to do is we're going to take a look at many different charts, and we're going to talk about where we currently sit, as an economy, and kind of give you guys a feel for what the market sentiment is currently based on the way the markets have been moving. I'm going to try and run through this as quick as possible, but we do have a lot to cover. So before we get into it, make sure to smash the thumbs up button so we can share this video to as many people as possible. With that being said, let's get into it. Right now, what we're looking at is the gold futures chart. This is a chart over the course of the past 20 years, and it's on a monthly time frame. We're looking back so far just to kind of give you guys an idea as what the market looks like in the big picture. The reason we're looking at this chart on such a big time frame is really just to give you guys an idea as what's kind of going on in the big picture. This yellow arrow that I've just drawn, this basically is the bull move of the 2008 housing crisis and the 2008 Great Recession as we know it. This yellow arrow that I just drawn, this is pretty much the pullback and consolidation within the gold market that occurred when the economy picked up and we really started booming again. Now, this yellow arrow shows exactly what's been happening over the course of the last 2 years. So let's take a second to reflect on what's really been going on these last 2 years that could be leading to some of this bullish movement in the market. So for one of the biggest things that could be causing some of this bullish move in the gold market is obviously this ever long-lasting trade war between the United States and China. There hasn't been too much progress made since the trade war even started, so again, this could easily be one of those big factors weighing in on the market currently. Number two, a really big reason is the United States is currently in $22 trillion in debt. Now, for some, that is a big thing to worry about. And if you think about it, it's never good to be in debt in general as an individual or as a business. So you got to think, it's definitely not good for a country to be $22 trillion in debt. Number three, not only is the country of the United States $22 trillion in debt, but much of the population that is going to build our future economy is currently in massive student loan debt, which is commonly known as the student loan crisis. This is also a big talking point for a lot of the up-and-coming presidential candidates. So this is a big talking point, and again, that could be another reason that the gold market is starting to push higher because of the fear of all this debt that is built around the United States economy. Number four might be one of the biggest problems of all, or one of the biggest fears for the market, and that is the Federal Reserve has been bailing out all of the smaller banks in the United States for many months now with what's called overnight repos. We're not going to go into overnight repos, but if you'd like to do more research on it, just Google it or go to Investopedia and you'll be able to whip up a couple articles that should help you get more familiar with the idea of overnight repos. This is a big problem because essentially it's really just the Federal Reserve pumping more money into our current stock market, which really just inflates the price artificially. So again, that could be another reason why investors are flocking into the gold market. All right, guys, what we have here is the same exact chart and same time frame. The only thing I've done is removed much of the stuff off the chart to make it easier to look at and easier to follow along. What we have here is a trend line. What I want you to pay attention to is you'll notice that when the price action is decreasing, the price naturally tends to hit the trend line and then kind of falls off. And then eventually we break back up over the trend line and you can see something interesting happens. The price of the stock pulls back and we actually test that trend line that was going down and now we hold above it. That can be an indication that we're going to reverse in price action. What we have here is a new trend line, basically going from the top, following this high point, down through this high point, and eventually we get the cross. But what you can see as a trend line, we had a top, we hit the trend line, we rejected. We came up again, hit the trend line and rejected, and then eventually we crossed through the trend line and we pulled back and held over and bounced. Not once, but twice. So now this trend line is becoming a support. Now what we have is the last trend line going down. This would be your kind of longer, most long-term developing trend that ideally if the price action were to break over it would give many investors the idea that this is in fact bullish and it's the time to be jumping in long buys. So you can see we have our top, and then we have this last little high here, which again would cause the trend line. We break over, we hold over in a beautiful bull flag, and then we go on this monster run. We are now in the stage of a second bull flag that will most likely push into a new high here and bring us even possibly close to the top here around 1800. It might not all happen in one swift move, but very possible that we could see prices of 1800 over the course of the next year to year and a half. Now what we're looking at is a resistance line where we can obviously see stock would not cross, would not cross, would not cross, finally breaks, explosive move. Now what we're looking at is a trend line going up instead of trend lines going down. So you can see we finally put in a bottom. We had a very strong bounce. We came down, we tested trend, we continued up, tested trend, continued up, contested trend, continued up. We eventually break, drop below, we go back up, we resist, and then eventually we push down and break up over the trend line and over what would have been that resistance there. We cause a strong push, and we have now gotten our first test of the upward trend line, and we have in fact confirmed that upward trend line. And there's a good chance, again, we'll see this move and push into higher prices. All right, guys, now what we're looking at is actually something different. You probably couldn't tell because it looks the exact same as what we were just looking at. This now is GLD. This is the Spider Gold ETF. And if I pull over a chart of what we were just looking at, which was the gold futures, see how the ticker symbol changes, and look what the chart looks like. Pretty much the exact same. And that is because the gold futures pretty much dictate what this ETF will do. Now what we're going to do is we're going to be taking a look at a couple different ETFs and a couple different ticker symbols. What we're going to be doing is showing you some very interesting findings. So for one, what we're looking at now is GLD. You're going to see a very big similarity between many of the charts I show you right now, and that's because you have to understand. What I'm pulling on the screen now is the gold futures. Again, the gold futures pretty much dictate what most of your gold ETFs are going to look like and or do. That is why as I start to drag this down, you'll see that the charts are basically identical. This chart is the gold futures. This chart is a gold ETF. All right, guys, now what we're doing is we're looking at GLD and many of these different gold charts on a 1-year time frame. So now let's take a look at the gold futures on a 1-year time frame. These are the gold futures on a 1-year time frame. The most popular gold ETF looks like that. Again, not perfectly identical, but pretty much identical. So again, gold futures look like that. Spider Gold ETF looks like that. Not exactly the same, but very similar. Now, let's take a look at a couple other very popular ETFs. But instead of looking at a regular ETF, we're going to be looking at leveraged ETFs. Now, leveraged ETFs offer a higher potential return because they're leveraged. And with them being leveraged, there is more risk. But let's take a look. So here's the chart of JNUG. This is a leveraged ETF. Here is a chart of NUGT, also another leveraged ETF. Now let's look back at the GLD chart. The most popular gold ETF looks like that. Some of the most popular trading gold ETFs look like that. Again, the gold futures look like that, but the most popular gold trading ETFs look like that. It's very interesting that the gold market has already started breaking out, but yet some of the most favorite gold trading ETFs are actually going the opposite direction. See, now most might think that's a bad sign, but to me that is a great sign. Because again, if you think logically about it, this is the gold market. The gold market has already started breaking out of this recent resistance. We are coming into a new high, which I believe is actually very likely to break. And if that is the case, and the gold market is meant to break out,
then wouldn't it make sense to try and suppress the price action of one of the most popular trading gold ETFs that offers higher reward than the gold markets in terms of GLD? So if we were debating whether or not to invest or trade something like GLD, GLD would offer a smaller return than would NUGT. So if we knew the gold markets were most likely going to break out and we're deciding where do we want to park our money for the trade, we would look at GLD and go, okay, this is the profit or this is potential return. And then we would look at NUGT and say, this offers a greater return. And again, if we already knew or had a very, very strong idea that the gold markets were in fact going to break out, we would want to buy as much of this NUGT 3 times leveraged ETF as much as possible before that does in fact happen. So a good thing to do would be suppress that price to buy up shares low just before the breakout move. And again, if you look at the gold futures, they have already broken out, yet NUGT has not, which raises very interesting concerns as to why. And the only logical thing I could possibly come up with is the fact that this is getting ready to rip. And the best thing you can do is to try and shake out the weak hands and gather in some more shares to go long. Now, some of you guys might be thinking, isn't it possible that the price action is going down because, in fact, this does want to go down? Well, again, let's come and look at these gold futures. And let's see just how accurate the moves are with NUGT. So as you can see, since the low here and we started to push up, NUGT pushed up. And when we started to pull back, NUGT pulls back. And then when we go up again, NUGT goes up again. And then as we pull back, same thing. NUGT kind of pulls back. And we push up, and we push up. And we pull back, and we pull back. And we go higher, and we go higher. And then when the gold futures finally do, in fact, top out for a little bit and pull back, you will see that, in fact, NUGT does pull back. So when NUGT is pulling back, yet the gold futures are cruising higher, why would that be the case? This raises concern to be very bullish on gold. And that is all I have for you guys here on this video. So I hope you liked the analysis there on the gold market. I hope it wasn't too long, and I hope you guys learned something new today. As always, make sure to subscribe, hit the thumbs up button, leave your comments below, and I will see you guys on the next video. Take care.